Today is Thursday, May 26th. Today I'm going to take a look at the S&P 500 and the many different interpretations you can place on it. A lot of different conflicting patterns that you can draw. And my view is that whichever one really jumps off the screen at you is the correct one. If you have to kind of squint your eyes and manipulate the span and things like that, then that's really probably not the market talking to you. You really have to let the market talk. So let's see what we got here. Put some lines. Let's put some lines on this thing. I think the most obvious one is this nice rally off the February low. And that has come into a pullback, which sure looks like a bullish flag pattern. All right, let me just adjust that. So you have a trend line breakdown, but then you have a pullback into what looks like a pattern, a rising bullish pattern, I should say, with a breakout over the last 2 days. And it's still just about to hit the open right now on Thursday. I'm going to get rid of that. So you have the breakout from a flag pattern. That appears to be short-term bullish in my view. And you have the move back through the 50-day average, close enough test to the 200-day average down here. That's fine. All right, let's see what else is happening. Now there's another interpretation I've seen other people use, and that is a head and shoulders pattern here. And if you take the head and shoulders, draw the neckline, you can see there is the left shoulder, the head, the right shoulder, and here it looks like an attempted breakdown. And let's zoom in on that. And you can see, I'm not going to change the format, but you can see that this would be a hammer candle. And if anything, it's a failed breakdown. And failed bearish signals usually end up being bullish signals. Some people call this continuation head and shoulders. Fine, if you want to label it, that's fine. I just look at it as failed bearish pattern. So that's another thing telling you that short term at least, this thing is going higher. All right, now I'm going to look a little bit longer. And I've seen some people then interpret this action here as a cup with handle pattern. And let me just put that back as the flag pattern. So you can see the cup with handle shape, the cup, handle, and the breakout. And the interpretation is really the same. You broke out from the handle, so it's a bullish pattern. Problem is I don't think this is a cup at all, because here you have another decline that's just as big as the cup itself. So I would say that you have to really take into account the whole thing. And if you're going to take into account the whole thing, you really have to zoom out a little bit. And check this out. Put in some horizontal lines, because to me, which place is it? You could argue which one you want there. Maybe 2135-ish on top. Get rid of a few things. And look at that. Which one makes more sense? Probably this one. Down there, that's the 2014 Ebola scare. So you have this giant trading range. Big moves, both directions, but still a giant trading range. The market is where it was a year and a half ago, and really not much of an advance for 2 years. So in that context, this is a pretty strong ceiling overhead. So that plays into this, a short-term rally with potential to the old high. Now it's not a forecast exactly, it's just a general directional thing. So to me, you have the short-term patterns, you have two patterns which are saying it's bullish. You have a longer-term pattern which has a pretty tough ceiling overhead. And I think it's a very strong ceiling. I mean, look at all this congestion in here. So there you have it. You have to look at the lines, put the lines on the chart, and pick the ones that really jump out at you and then make sense in the bigger picture. So that's the story, and check it out. Just be careful when you put these lines on there, because if you come in with biases, you think one way, you'll somehow get those lines to match up to what you think. Let the market talk at you, and you'll probably be a lot better off.